You've got somebody called Di, who's a local accountant, who's agreed to correct the bookkeeping errors made in the financial records of two businesses, Peter's Pasties. We've got Peter's Pasties in Part A and Morgan's Mops, which is in a separate Part B here. So we're going to have a look at this. The first part then, it says the bookkeeper of Peter's Pasties shop extracted a trial balance on the 31st of March 2017, which failed to agree. The difference had been posted to a suspense account, and we're not told how much the difference is. But the following errors, 5 errors, have later been discovered, and what we're being asked to do is to prepare the entries in the general journal necessary to correct the errors. So if you remember, the general journal is a book of prime entry for non-routine transactions, and examples of that include correcting errors. It tells us here that narratives are not required. So a narrative is an explanation of the reason why the journal has been done. In real life, they would be needed, but in an exam situation, they're often not required. So let's look at the errors then. First of all, it tells us that the sales daybook, now that actually these days is known as the sales journal. So remember, the sales journal contains a list of all the invoices that have been issued to customers, usually for a month at a time. And it's been understated by £850. Now that means that the sales account has been understated by £850. So that's a one-sided error. That is one that will mess up the trial balance. Therefore, it will require the suspense account to help fix it. So let's sort the sales account out first. So we're going to need to credit the sales account with £850 because at the moment it's understated, and we're going to debit the suspense account. It's a one-sided error because something's been added up incorrectly. So there isn't a corresponding incorrect entry anywhere else. So this is why the suspense account is just a dumping ground for the other half of the entry when you make a correction of one of those one-sided errors, the RU errors. So reversal, partial omission, or partial original entry. Okay, credit sales of £490 to Doogie Aston have been credited in error to Doug Austin's account. Now, this is a double whammy. We've got an error of commission going on because these two accounts in the sales ledger have been mixed up. But the other error we've got is a reversal. It shouldn't have been credited. It should have been debited to the customer's account. So we've got two errors to correct. So the way I would deal with this one is to do it in two hits. So sort out the fact that at the moment we've got a credit that doesn't belong in Doug Austin's account. So we're going to need, so that was number one. Number two, we're going to need to debit Doug Austin with £490, and we're going to credit the suspense account. It's a one-sided error. So the error of commission and the reversal all mixed up together here. And then Doogie Aston, we should be debiting his account because we're missing. So remember, when we make a sale to a credit customer, we debit the customer, we credit the sales account. So we need to debit Doogie Aston and credit the suspense account. So the suspense account will end up with two lots of 490, but we should do it in two hits because the corresponding entries are for two separate accounts. Okay, so that's numbers 1 and 2 dealt with. Number 3, the discounts allowed total in the cash book have been understated by 370. Now, discounts allowed is an expense. It's understated, so we're going to need to debit the discounts allowed account. So debit discounts allowed with £370. And because it's a one-sided error, it's an error of original entry, a partial one, because just one balance has been calculated incorrectly. We're going to need to credit the suspense account with £370. Okay, so that's number 3 dealt with. Number 4, discounts received of 675 have been debited in error to the discounts allowed account. So we've got an error of mispost here where something's gone to the wrong account, but we've also got a reversal because discounts received should be on the credit side. Okay, so to sort out the error, I'm going to suggest we get rid of the incorrect amount in discounts allowed. So at the moment, it's been debited to discounts allowed, so we're going to need to credit discounts allowed with 675, debit the suspense account with 675, because remember it's a one-sided error, so the other half of the entry is going to be deposited into the suspense account. And then let's put the correct entry into discounts received. So 675 into discounts received. And again, the other half of that entry is going into the suspense account. So the thing with the general journal is it always needs to balance. We need to make sure that the debits and the credits are equal at all times. Otherwise, we're just going to make the problems with our suspense account even worse. Final entry here, the owner had withdrawn goods for own use of 7,600 but this had not yet been recorded in the accounts. Well, this is a total omission, so it won't mess up the trial balance. Therefore, we don't need to involve the suspense account. We can just do a straightforward adjustment, goods for own use, which are debited to drawings and credited from purchases. So goods for own use, we take away from purchases, never from closing inventory. Okay, so that's part A dealt with. That's Peter's Pasties. Let's move on to part B. This is Morgan's Mops, so separate business that this Dye local accountant is dealing with. He's identified the following errors, all relating to the period. It doesn't say what period. I assume maybe the 31st of March 2017 again, but it doesn't really matter. Now this time, you've got to be a bit careful with this. We've got to state whether the correction of the errors will result in an increase to profit, a decrease to profit, or no effect on profit. Now just be careful when you've got columns. The tendency for some students is always just to put ticks all over the place. We can only put a tick in when there's no effect. If it's an increase or a decrease, we need to state the amount. The other thing to be aware of is whenever they've completed one part of the question, that's usually because there is some scope for students to get the wrong end of the stick or to incorrectly complete these boxes by just putting ticks in, for example. So always when you're given one of these, make sure you can follow the logic. So the first one is wages paid of 356 have been completely omitted from the books. Well, let's think through the double entry. If we need to reinstate that transaction, we're going to debit wages and credit either the bank or the cash. Now, wages is most definitely in the income statement. It's an expense. Therefore, increasing wages will result in a decrease of £356 to the profit. Okay. Number 2, the purchase returns daybook have been overstated by 5,600. Now, purchase returns is a credit entry on the income statement. It reduces purchases, reduces cost of sales, therefore increases profit. Now, if we reduce the amount of that reduction, so we take 5,600 away from purchase returns, our profit is actually going to go down by £5,600, okay, because we're putting a debit into the income statement, and debits on the income statement will always reduce profit. Okay, number 3, cash drawings of 320 had been omitted from the accounts. Well, to fix that one, we're going to need to debit drawings, credit cash. Neither of those accounts is on the income statement, therefore there will be no effect on the profit for the year. Number 4, Morgan had used his business bank account to pay for his son's car insurance at a cost of £642. This had been included in the business insurance for the year. So this is an error of principle. We've mixed up the rules of accounting. A personal expense has been charged as a business expense rather than put to drawings. So we're going to need to credit business insurance. So we'll reduce business insurance, therefore profit will go up by 642 and the debit will go to drawings, which doesn't affect profit. So we're actually going to see an increase for number 4 of £642. Number 5, commission received of 420 had been debited to the commission paid account. So this is a reversal. And remember, to get things on the right side, we need to double them up. So we're actually going to be crediting commission paid and crediting commission received with 420. So the total being credited to the income statement is double that amount. It's 840. Therefore, we will see an increase in profit of £840. And then finally, a sales invoice of 333 was entered in the purchase returns daybook. So a sales invoice, an amount of sales has been treated as purchase returns. Now, if we think about sales, that's a credit balance on the income statement, and so is purchase returns. So all we're doing is moving 333 out of the credit side of one account and into the credit side of another. Therefore, there will be no effect on the profit. I hope that's helped. Thanks very much for watching. Don't forget to like and subscribe if you've enjoyed the video.